Here's the 30-30 list. Comes out on Thursdays normally, but we've published it on Wednesdays a day early, and we've got a surprise for you listeners. We've got a deep dive on one of the top momentum companies. And the challenge is try not look at the ticker, follow it as you don't know what's going to happen, and see how that goes. We're also looking at the top 30 momentum that we normally look at. That's over the last quarter. And the top 30 launchpad companies. Together, this list surfaces the best opportunities that we can find on the ASX. It normally goes to YouTube members on a Thursday afternoon, so they can put through their requests and send it into this video so we can cover it and get some feedback on how these charts are setting up, what they look like, and that volume analysis. And we rely on Gary Glover for this. So we say, good morning, Gary. How are you?
Yeah, I'm great, Chris.
Thank you for the flexibility. We've moved this around, got some travel arrangements on Friday, so recording wouldn't happen. And we've surprised the members in the way that I haven't got too many requests because it's a day early and they're used to it coming out on Thursdays. But you have got a nice little surprise for us, which I don't know what it is. You've given me an indication, but it's a deep dive and we're going to learn a lot from it. From what you described, this is what I used to do every day at 11:15 is I'd go for a deep dive on a momentum leader, pick a random date and then try plot through it, find my buy signals and my sell signals and rate myself. So is that how you're looking at it? What brought you to bring this to us and share it with us?
Yeah. No, 'cause I thought it's we do make it sound easy each week, sort of this momentum trading, but it's important. I mean, it's important to have a process that you follow as a momentum trader, and why it's important is that if we don't have a process, then we're going to react to every day, every bar, and we're going to follow the market rather than follow a process. So, we're a great trader. So there's some reference there about you don't know what the market's going to do, but if you don't know what you're going to do, you're really in trouble. So you should know what you're going to do if a certain setup arrives, and then what path you're going to follow. And it's but I think just look, there's actually a stock on the list there, and I looked at it. Thought that's a really interesting chart because it was a bit of a laggard. It kind of came to the party late, and then it sort of did eventually show some strength there and give a few triggers there, and then it had a few little throwbacks and stuff as well. And some of the bars were pretty not the clearest sort of setup. So that's why just sometimes you don't know what you're going to get with momentum names, how far they're going to run or how far they're not going to run, and they pull back here. But I just thought it was a really interesting exercise to have a look at, and it will probably explain to you why momentum trading is not easy for everyone, and some of the traps that most people get caught in. It's probably the clearest part of it there. Yeah.
Well, let's see if we can unfold the opportunities, the setups, the triggers and the entry, and more importantly, by the sounds of it, the traps as they unfold bar by bar. So let's go to screen share, and I'm going to try, if you can, just try not look at the code as Gary brings it up, because this is the greatest challenge. If you know where it's going to end up, then you just say, no, I'll hold, and then at X dollars I'll sell. But the real benefit in this kind of a study is it's like you're imagining that you are doing the trades and you're running with the emotions. Well, I don't know what tomorrow is going to bring. So if I sell now, am I going to have sold at the peak, or am I going to have left a lot more on the table and regret it? And that's clearly where knowing your plan comes in. Gary's always talking about selling into heated, whether his red light, green light, amber light situation of 2.5R or 2.75R, whatever that is, that's his plan going in. So yeah, we're not seeing the chart here. You've done a good job of hiding it from us. Well done. Except I can see what it is already. Didn't mean to. So just focus on the right-hand side if you can, everyone watching. And we've got it hitting the bottom here. I'm going to give the context of saying I can see April 7. The market's been on the nose. We thought there could be a low in March, but it kept on falling. Here we have with April. And all the moving averages are pointing down, so it's in a solid downtrend. And with that background, I guess we hand over to you. When you've set up some bars, what are you looking for, Gary?
Yes, I mean, just it's interesting there because this has been this has been an old leader, so and has a stock that performed pretty well in the past. So you do keep an eye on those old leaders, sort of see whether they could potentially sort of set up again. But so this does come out of that April 7 low, has a bit of a bounce there, but really hasn't even broken a swing high along the way. So it's been a bit of a laggard. Doesn't really show the sort of strength that you really want to see. But
Just for that, you say swing high. I'm looking at sort of the middle of March where it's almost come back to the 20-day moving average. I'm going to say it's maybe the 20th of March, and that swing high is maybe like a 290 or something, or 295. Is that the swing high that we'd want to see it break when you're talking about it hasn't broken a swing high yet?
yeah, so it doesn't look that effective on the chart there, but you do get a bit of a move there, obviously 150 up to 250. So the percentage move is pretty tidy. So that would probably hit the our sort of launch pad that's up there in one of those sort of weeks there, just because the percentage move is it is a bit of a high delta sort of stock here. But really, we're as momentum traders there, we want to see some sign of strength, then some sort of congestion, and then some sort of breakthrough as well. So, what we can sort of see here is it's had a bit of a bit of a rally there, bit of strength there. The volume's okay, and then it sort of starts to sort of congest there. And look, ideally, we want to stay in the top half, Chris, as well. So when they have a bit of a pullback, we want it to sort of stay fairly firm. You can see here, this sort of goes up for 4 weeks, and it goes sideways for 4 weeks there. So it's sort of looking kind of constructive there, but then it does actually sort of break down. So actually, it doesn't look so good there, but then it does actually end up recovering back. And so that box is actually roughly 50% of the range, but also, so we want to sort of see those sort of stocks congestion at top half here. So it starts to, show a little bit of strength. There's some volume coming through there, but again, still really hasn't, it's broken one little swing low along the way. So that's one positive aspect, but probably not enough to get our money here really yet. So we're still sort of watching this sort of tighten up here.
Sort of creates kind of a wedge or some sort of compression, but
Yeah.
it falls out the bottom of it, which is not ideal normally.
Yeah, so we had a bit of a bar here, which is probably interesting there. Some people might have bought that breakout there, but it was still a bit of still under a swing high there. So it's not the sort of strongest sort of setup there. But here's the first sort of show of strength for the stock that we're seeing the whole time here. So now breaks out that little downward range, does break out like, you could argue there's a bit of a low cheat in there on that congestion, but probably not the best one. Me personally, I'd like to sort of see like a lower high or a B wave get broken there. So that's around about, I think it's 245, that bar is there. So I really want to see it close above 245. But you can see here that volume was actually, you could have maybe bought that on the close there, 240. But then coming through the next day, we saw good volume and then some follow through there. So even if you just sort of left it there, so that might be the first time you actually look at the stock here, is showing any sort of strength there. And that, does little congestion bar. Some people might want to wait for the 52-week high to break there. So maybe they break, they buy that. That's the high there. It's actually now sort of the highest close.
For at least a quarter.
Yeah. So that's roughly around sort of 270 there. So that's probably the second sort of sign of strength there for the stock. So,
and is that breaking a couple of swing highs there? Like, is that?
Yeah, so you're breaking a bit of a rectangle as well, and there's pretty tight sort of rectangle in here. We've had a couple of touches of this high as well, but then breaking to a new high. So this is the thing, momentum traders are actually looking to buy all-time highs or buy monthly highs or buy 3-month highs or 6-month highs or 12-month highs. So they're looking to sort of buy strength, okay? So this is a difference between people trying to buy lows and, buy lows, sell highs sort of strategy there, which is flawed. That's not the contrarian strategy. That's what everyone's trying to do. Whereas the contrarians of the market, really, the very few and the best traders are buying strength. They're buying new highs. So they'll be buying a breakout of this high and maybe topping up and buying a breakout of this next high. Okay. So really, if you just say you had 100K account, Chris, and you say, okay, I'm going to split it, 20% over 5 holdings there, which is pretty, some diversity of the 100K account, but you're, it's still, you could basically sort of, something like that might be, what a new momentum trader might follow there. Maybe you can go to like 25%, typical portfolio theories is 5 to 10%, but we know the momentum traders are going to be more heavily.
You got to concentrate on your best opportunity.
Yeah, going to be more heavily sort of skewed there. So, I think, a 20K account, 100K account, say 20% there, you might end up getting like, I think, roughly just over 8,000 shares of 246 would keep you under 20K with your brokerage there. And then from there, once you enter in that position there, what do people do? So
yeah, now I'm in there. I've committed to a position.
Yeah.
I'm on for a wild ride. And this is where you're talking about the plan before. You're saying, if there's an old expression I know, which is more general than trading, but if you don't know where you're going, any road will take you there. So if you're invested, well, the market will take you wherever you're going to go. You don't have it. So if you're talking about allocating, you got 100,000 portfolio, allocated $20,000 to this, you're now invested. I assume you're saying that we've got it with a plan, or you're kind of highlighting, well, if you bought it and you don't have a plan, this is kind of the emotional roller coaster that you set into.
Yeah, that's right. So, I mean, say you bought, 8,100 shares, 246, just under 20K's worth. You got to, O'Neill would use probably like something like a 7% stop. So if they're using like a 7% sort of stop there, then you'll be using some maybe multiple of risk to take some off. Or, Kalamagi would basically looking at 3 strong days and then take some off. Or me personally, I use like 2.75 times my risk, or whatever my sort of stop was in here. So if we sort of bought at 245 here, Chris, obviously breaking above the swing high here. So we bought at 246. Once it broke above here, we waited for a break above 245. Then, we're going to put a stop in here. If we put our stop back 2 bars, back at $2 there, that's going to be a big stop. That's going to be way beyond our risk there. So, so if we had our stop at sort of back at the 20-day moving average there, that's about 219. So that's still about 27 cents, which is about 11%. That's a big stop there. So that's a lot of risk you're putting out as well. So
You've written a lot about that, right? Whereas once you feel, I think it's 8%, the maths get really hard to climb back on those stops.
So if you took the midpoint of this bar, being a big wide range bar, you want to maybe see it hold the midpoint. That's about 226. That's about 8%. Whereas 224 is just around, I think, about 7.3%. So if you just went under that, say 225 level, I like to sort of be a cent or two under the zeros and the fives, and I just sort of, that tends to hold markets there. But that's still a pretty wide stop. That fits in O'Neill's model. If your stop was around about 224, so it seems pretty tight. But the thing about momentum, once they saw that sort of strength and come out there, they often sort of don't come back here. But this is the risk of being a momentum trader. That's why sometimes, if you're not sort of a 100K trader, say you're a 200 or 300K trader, then you can kind of build a position as well. So maybe you don't put on, maybe you're going to put on a, say, 40K position. You might only put on, 15 or 20K or 10% of it initially, and then you add into it. So you might have put on half of it here and then half of it on the shallow strength there. And then that moves, your stop basically gets moved up, and then you keep your risk under 1% the whole time. Because you can see here with these high momentum stocks, to have a 7% stop, it seems pretty tight. Some of these high momentum moves can move pretty large. That's why there's some risk, that's why it's not always easy there. You gotta formulate your sort of, you gotta have your plan there. That's why sort of the pros will sort of build into that position, because I'll sort of maybe get a half position on at, say, 7, and then if it gets so then I can add more to it and then bring the stop up higher to a safer level. Because once you've sort of got a few positive bars, then maybe you might be using the low of the last 2 bars. So just say, once you get to this day here, you might use the low of this, so this is what, 237. So maybe you'll just sit under that 2, you might say sit at 234, but back a little bit further. But now your stop's moved up. You can add to your position, and your risk is still under your 1%. You haven't sort of pushed it too hard there. But then, okay, so that's the sort of, trade structure there in terms of getting a signal. and then put our stops and then making sure we keep within reason there, and then whether we add or not. But for the new trader there, just putting a clean trade, one trade only, one stop only, one target only there. Then we're looking probably for 3 days of strength there. So this pops up here and it gets up to 305 here. And then the next couple of bars, it has a bit of a shakeout and sells off it and it comes off it. So all of a sudden our trader who bought at 246, 20K's worth, it got to 305. It was worth 24 and a half. So basically you're up $5,000 in the first 3 or 4 days on that high momentum trade. And then 2 days, bang, it's gone back, basically given a 4 of that back. So now you've gone from being up 5 to maybe being up 1,100. So these are the emotions of actually seeing that go down. It's like, oh, what do I do? I don't want to see this close back below here. It's, has it closed back or is it holding the 10? I mean, it's pretty early for the 10, really. I mean, be wanting to, momentum traders might give themselves a bit more room initially, maybe something like the 20, but then if they're really fast moves, you want to sort of eventually hug the 10 here. But, you've just gone through the emotions of being up $5,000 to being now only up 1. And this is just in the first
matter of days.
Yeah. So you're like,
so before you tick on, you've entered 245, you're up $5,000 on that day, whereas a nice green candle, you said that you can see you're up $5,000. Have you moved your stop by then? Or what are you doing in that when we've had that quick rally? You haven't quite sold into 3 solid days of strength yet.
Yeah.
But let's forget pyramiding in or building into a position. Just assume the one allocation right at the start. Have you moved your stop yet?
Well, see, my process is probably different from Calamagi's. Calamagi's trying to sort of sell, have those, once it sort of comes out of this congestion pattern, breaks out, he's looking for, say, sell, if he gets 3 days in the strength, he'll take off some and then backstop the rest with a moving average. That's his program. My program is to go 2.75 times the risk
on the first sell into it. But what about the stop?
So what I mean by that is, so if we were going to use O'Neill's sort of stop, which is around that 7%. So if I'd entered at 246 and I used like a 7% stop, and my stop was at say 224, which is 18 cents, then I'd be looking to try and take off 2.75 times that, which is 49 cents, which would be 295.
So you would have sold.
So I would have
a third, depending on how much you got on.
That's right. So 295 there, I've already locked in, maybe a third or a half of my position, and then I got then I move the rest to sort of break even, and then I got a free carry on the other on the rest of the trade. That's how I personally do it, but everyone's different. I know sort of Jack Casellas does a 2-for-1 risk reward to take half off and then backstop the rest. Kalamagi will basically sort of just look for, he's sort of more, he'll look for that sort of, doesn't have a formula. He just looks for sort of like 3 strong days. So maybe that's 3 strong days. I don't know. It's not really at that super strong. He's looking for more sort of strength there. So next couple of bars, get a small volume inside day. All of a sudden, there we get another breakthrough. So we'll get another show of strength there, Chris. So again, some traders actually might add to this on the strength. So it's weird, actually, sort of like you're probably going, why are we buying at the, why are we buying above the high? Why are we buying above the high? Why are we buying any high? Because that's what pros do. Pros want to keep adding on strength. Okay. So you think, oh, why didn't you buy that dip? Why didn't you, because that's pulling back here. It's not sort of showing the strength there. We want to want this name to keep showing strength. That was actually a good volume bar as well on strength there. So then we go pretty strong.
Hang on, before you go the next tick, on that last bar, have you moved your stop up yet?
Yeah.
I know I will have. After that last bar, I would have moved it to this swing low and just below it, like you say, kind of round number things. That's where I would have moved my stop to.
Yeah. So at the very least, your 20-day moving average is moving up here. So that would be, that would be at least sort of where you'd be moving up to. Okay. So your 20 might be trailing up here. So that keeps sort of moving higher. You're basically.
Yeah, I'd almost be at the 20-day now. That's where my stop would be, around there.
Yeah.
Just coincidentally on the swings. Okay, wow. So you have another day where it's rallied up. And are you selling into this? Obviously your 20 days going up, so the stop's going up. But
Yeah.
have you sold any more after you've just recently bought, maybe 2 days ago?
Yes, it's the Kalamagi would probably that's 3 pretty strong days in a row. So if he hasn't sold any by now, he's definitely selling some into that heat there. So, so if he's sort of bought, if he's sort of bought a 246 there, more than likely he's probably added on, it's added more at higher levels there. But he's definitely going to sell some into that sort of strength there after 3 days and sort of strong price pattern there. And I think Minervini's probably the same there. He's probably going to sell into that sort of strength as well. I mean, but you think about here, you're up, this now is at 341 on the close there. So you've gone from 246 to 341. Yeah. So you're now sort of sitting, maybe like an 8K profit there. So, this is why, again, people are looking at the numbers and go, oh, I'm up, gone up 5. I was saying up 1. Now I'm up 8. So they go for the cushions of that money every day. You're thinking about the money. And that's the pros don't think about the money. They're not looking at the money. They're not looking at the swings in they're looking at the trade. This is what, unfortunately, what most traders do is look at the money.
Most traders, when they're looking at that and they go, I'm up 8K after they put in 20. Oh my goodness. It's a good holiday. I'll go on a nice holiday. I'm looking at a holiday. On my screen is a holiday. And that's the emotion that overcharges their decisions. So 3 solid days, what next?
Yeah. So, so we know the pros will sell in a heap. So they're going to sell, but they're only going to sell like a third or a half into that. Okay. So then, the newbie, if he's held on so far, he's probably sold into that heap. He's up $8,000. He's stoked. Oh, it's a big trade for me. I'm out. But then it goes up another bar here. But then I was like, oh, well, that is actually like a reversal bar. So if you're bold enough,
well below, way bold enough the range.
Yeah. So you're bold enough to sort of hang on. You're like, oh, this is like that's a strong. It's had a, it's ended up in the lower. It's a hanging man. My candlestick. I read my Stephen Nissen book the other day as a hanging man. That's a bearish setup. Well, the volume, that's a sell. So it gives you like a bit of a. On an individual bar basis, it gives you a bit of a sell here. So you think, oh, I probably should be selling this. So if you haven't taken half off, by now you think, oh, I probably should take a bit more. I should take, I should get out. That's a, it's gone the size of my rectangle at least. I'll get out of that. And then the next 2 days goes bang, bang.
Bang, bang. Yeah.
But then we get another sell signal. We get another hanging man. So again, if I haven't freaked out by now, I'm now freaking out thinking, oh man, I'm up $10,000 on a $20,000 trade. I'm up 50%. And I was like, oh, I can go and tell all my mates how good I am. I could post on Twitter that I made a 50% trade. So, but again, we're looking at that bar as a sell bar. So this is the undisciplined traders. They're reacting to every single bar on this. Okay.
Day by day. And then before you tip on, I know that this is where I struggle with right now. I've got my stop. I've moved it up to a swing low. I was previously, say, at 275 or something like that, just in that like minor low.
Yep.
But then after this solid climb, I look at it and go, well, I haven't sold into it. Like I would have sold progressively, say like your 2.75 or something like that. I've taken maybe half my position off. The rest I'm letting it ride with the stop. I trade end of day stops. So I'm sitting at 275. This thing's over, trading over $4. I'm struggling to find somewhere in between. So I'm looking at maybe almost where that 10-day moving average is. If we go immediately horizontally to the left, I'm going to take the low of that 1, 2, 3, 4 days earlier. That's kind of, I'm going to guess that. I haven't done a lot of research into this particular time. So are you still running a 10-day or a 20-day? What kind of stop are you going to run in this situation where it's running away?
Yeah, so what I've been trying to do recently is because I do like to take some off into strength there. So I'll take that first. So if I end up getting a 20% position on, which is my maximum, then I'll take, of that 20%, I'll take, a quarter of that. So I just say 5%. my risk off. So of that 20%, I'll take a quarter off at the 2.75. If it goes to say 3.5 times my risk, again, I'll take another quarter off. And if it goes to say 8 to 9 times my risk, I'll take another quarter off. So sort of that's sort of, and then the last parcel hopefully might be 10 times your risk. And then you might net out, if you've done 2.75, say 3.5, and say 8, then maybe a 10 or 11 there, it ends up being 5 times, 5 to 1 risk reward, which is pretty good. It means you pay for your next 5 trades. That's the way that I look at it there. And you try and let that the last parcel run with the MAs. That's that's the hardest part. It sounds easy to follow, but when the stock's up so much, you're like, oh, I got to bank this thing. You've already spent the money.
And you're looking at your moving. If that's the case, you've already sold 2 of your parcels. Let's say you've only got 3 parcels and you've got the third one, you're trailing it with the moving averages. We're looking at a close here, it's 391, but your stop, if you're using the 20, your stop's at 287.
Yeah.
So what a dollar that you're leaving on the table before your stop kicks in. Is that your last position? Is that like
no, so that
emotion?
Because what you see in the stock is, I think you sort of start off with most of these sort of around the 20. But then if you do have a really strong name on your hands, and look at that stock here, it's held the 10. It's floated the 10 there, bounced off the 10 here. So this stock's telling you it's strong, and the 10-day moving average is important. So now you're getting up here, you should be moving to the 10-day moving average. So your last parcel's at 320 here.
So that's your stop in this kind of market. Okay, that's 2 parcels. You want to be letting it ride with the trailing stop losses on the moving averages. It's now at 320-ish.
Yeah. So you've already banked a 2.75, a 3.5, and maybe a 8 to 9 times risk as well. So you've already netted out like a 4 times your risk, and your stop's not a break even. It's above your entry as well. So you're going home a winner regardless. And it should take the edge off mentally, so you're not stressing out there. But you'd be surprised there, people, when you first start mental trading there, and you see, oh, this is so far away from the moving average, and my stop's back here. If I give that back, I'm going to give back another $1,000 or $2,000. So you start thinking about what you're going to lose rather than what can make there. But this is why it's every day sort of you've got emotions there, coming on there. So again, if you didn't sell here in this first reversal bar, you didn't sell here in this reversal bar, you've got a bearish engulfing pattern. Big volume, outside day, that's another sell signal. So it's got 3 little, candles there that told you to sell here. But again, so if you haven't freaked out by now, you're probably going to freak out here and sell out. And
you've probably already hit your 9 times. So
yeah, you've probably already got you've probably taken some more off here, maybe, if you've sort of held into that risk there. But then the next couple of bars there, we see that holds and reverses quite strongly. Just the thing about mental trade, you don't know what's going to follow. I know we're looking at breakouts and stuff there, but you never know how far these things are going to keep running. And it keeps giving you sell bars. There's another. This is an inside stay here. Looks weak. This is another. It's gone higher again.
Volume closing on the lows.
First thing, it's another sell signal. Another sell signal.
Big volume closing on near lows.
Yeah, it's going up here. But now our stop's getting up around this sort of $4 there. So the thing is, if you're taking some off, it takes the heat out of the emotions of each day here. And if you have a process, so you just follow that process. You don't get caught up in each bar and stuff there. As when you first start off trading there, you were looking at every bar. You're looking at every P&L, every, I was up 5, I'm down 1, I'm up 3, I'm back to square, I'm up 4, and you're counting the dollars. That is the worst thing you can do. I mean, if you read every trading book, it tells you not to be
separate yourself on a P&L as the individual one.
Yeah.
I mean, what's the thing you can do is pressure yourself for the outcome.
Linda Raschke, who basically managed billions, she never looked at the P&L. She never knew. She asked the bookkeeper did all the P&L. She just had a process. She followed it. She didn't look at what was, I knew I was up or down, or I was having a good time, but she never knew the P&L. She never looked at it. She left that to the bookkeeper to sort out. It just tells you that that's the sort of mindset you got to have to be champion trader here. And then we're still in the trade here. So this happens to be number 11 on the quarterly momentum list there. And it is CU6. I probably gave it away. Probably people might have saw it over here in the little bar there.
Yeah, I saw that. Unfortunately, I saw that early. Once everyone looks to the right.
Yeah. Yeah. But it's a really good exercise to do, looking at some of these little leading names. It's sort of stocks that have had a bit of a run here. Because this is interesting, because it was actually a laggard there. Didn't sort of show the early strength there, but it did have that is a reasonable percentage move. So it does sort of make the leading criteria, because that's sort of like a big percentage jump and then ingest there, but really doesn't sort of show you any strength here until around the 27th of June, breaking up kind of swing high here, and then maybe closing this high here as well. But it's a good exercise as to how you might trade some of that. So, I would trade some of that added to there. Then it's come back here. But I mean, again, you might end up with a little B wave in here, Chris, as well. This is you could maybe get that trade, you saw the half hourly there. This is sort of sat on top of the previous breakout, congesting there, looking pretty strong. I think that was 295, that high as well. So you might have, I might have been prepared to buy back that quarter if it closed above here, 296, or maybe I just buy it on the back, or buy it back even higher at closed at 306. Maybe we just buy it on the close of the day. It's finished strong here. We should be adding to it. So that's the thing about sort of, most people are afraid to buy that sort of strength there. That's the one thing that I'm starting to sort of learn here. I was listening to a really interesting podcast there from one of the US investing championships. Guy, I think he averaged about I think he had like a 400 type return a few years ago. He's sort of analyzing his risk. He realized that if he tightened his risk up, his losses were even narrow. That had a positive effect. His three best trades were buying all-time highs. So not buying lows, not buying, like a higher low or a lower high, I should say, but actually all-time highs. His three best trades were buying. He didn't enter the trade until they hit all-time highs. Yeah. So again, buying strength. That's what mental trading is about, buying the strength there. Sort of, everyone's trying to buy these lows there. It's just not the way the pros don't think that way. They don't trade that way. They want to see strength there. They want to see, highest, just to think about, one thing you should be looking at, look for the highest price for the last month, the highest price for the last 3 months, highest price for the last 12 months. Just scan those stocks. Who's showing strength? Showing strength. That's it. If you just look to those three things only, that's all you need to look at.
Well, we're glad you mentioned that, because members have access to something we've just created, and we've created a whole filter where every single day you can look at companies that are within 2% of the 3-month high. Because this one here wasn't the 52-week high, but it was a quarterly high by the time it broke out. So based on our conversations, we've created that filter. So if they want to join, yes, you can click down below and hit the subscribe button, there's join, and you can get access to that. But also they get access to the 30-30 list, which we should move into. So the quarterly momentum leaders, we've definitely looked at CU6. That is on the list, as you said, ranked number 11th. Yeah. LKY, is that one that's, clearly it's momentum leader? And
number 2 there. Just thought it was interesting there, just because he sort of had a little bit of a cup and handle in here. So did end up being a little bit of a double handle. But, the one thing you sort of saw with the selling there was that the selling was pretty light on that little handle there. It's a bit too small for me. But it does have that little handle there. Now that EOS, I think we sort of show, but most of those military stocks there would have shaken out most momentum traders there, because they broke below the 10 and the 20-day moving averages there. But one thing interesting with the stock here, there's one thing I wanted to highlight there, was that if you think about trend structure, I know sort of McLaren would also talk about the trend building on top of each other. When, those old highs can become new lows. So even when there's sort of burst out, even when there's pulled back here, you can see how it held on top of that. I like using the candles there, the body. That's the most important thing in my opinion. You can see how that's held sat on top of that previous high. I know it's a bit of a gap up and taken up there, but no surprise to me that if it is going to hold there, it's going to hold on top of the previous high there and show a bit of something there. So there's a little bit of volume in here, which you probably don't want to sort of see. You want to sort of see it be lighter, but I say these military stocks are being so strong here. So I mean, Drone Shield there, which is just the beast. I think we'll be going back and doing this one. Momentum going back, probably it'll be a chart you go back and just starting over and over again. I mean that's been pretty strong, but again it did close below the 10 and the 20 here, but there was spacing between the last sort of high and low as well. So one thing sort of McLaren does that, it's hard to trade that. It doesn't really fit the classic momentum sort of studies of momentum leaders. They normally, once they break out under, go to 52-week highs, then they sort of hug the 10 and the 20, just hug the 10 there and then close. But that's still a great trade there, 150 to 350, it's not 340. It's still a great move here. It's not important to be in there. Everyone thinks they have to get out at the top. You don't have to get out at the top there. You just have to get a low risk entry where only a small amount of your capital's at risk, and then a big percentage move where and then mechanism to sort of de-risk the trade a little bit on the way up, and then let it run, and hopefully you get a big winner, and and then you're looking for another one. I mean, so it's just interesting. Those names has been pretty robust. They've held on there. What else we got there? BNZ. I thought this was interesting there, just because it's sort of, again, that trend structure there. It sort of had that little ABC there, sat on top of that previous high, left it in a pretty strong position. You can see in here there wasn't a lot of selling going on there. So big volume bars there, pretty light selling here, and the whole thing did tighten up there. So there's that sort of, I was thinking about this actually last few days. I said, how do you program 3 tight days under the high? Do you see that? Yeah. Can a coder send me that code, please? Because if we want to sort of see, we want to see, stocks that are showing strength and then just coiling up under the high there. So the two, if you get 2 or 3 days of coiling here under the high there, that's what
a potent signal.
Right. Yeah. That's what David Wright. That's his mantra. He's that 3, but the light volume here, that's what he's looking for all the time. So congesting under the high, nice and tight. So love this fact. Yeah, you're getting that. I love the fact you mentioned that you sort of try and get those strong stocks, and then the coiling under the high or within the 2% high. That's gold. That's what you're looking for.
Well, again, there's that list. Yes, you can filter for within 2% of the 3-month high. There's another list, which is the coils that Gary and I have talked about multiple times. And this is what Gary helps identify, is actually have a look on that list. And you don't go by rank 1, 2, 3, 4, 5 on the coils. You actually start at the 75 and then go down. Because quite often you'll find where they're within 2% of the high, and the coil rank is 75, normally down to about 40. That's kind of the code that Gary's talking about. It's not perfect, but it gives us a very good list of just finding those companies. If it's on the market, it's in that list normally. Anyway, VTM.
Yeah, we talked about VTM last couple of weeks. It's obviously been pretty strong, good volume through there. Had this little pullback in here, Chris, like a little bit of a, there's our cup and a little handle there. So it's come through there. There's some pretty loose bars in there, but that's kind of typical when we see a little handle. But has come through there. But that's a nice cup and handle there. So still pretty robust there. QOR, again, we talked about this one a couple of weeks ago as well, Chris. 52-week high, just buying that 52-week high. This is what a lot of people do, just waiting for the sign of strength there. That day there, I think, was closed at the high there, 23rd of July, around 51 cents. The thing about that too, the last 2 price bars were on big volume as well. So showing strong momentum at a new high. That's what, again, show strength. Zip. I think this is kind of interesting there because it's, I did sort of notice this there. It was sort of Again, it's been pretty strong, really strong trend there. Got that big sort of cup there as well. So we've sort of gone back to sort of old highs there. Had a bit of a pullback there, bounce back in here. We did start to see those 3 bars there, Chris. See a little 1, 2, 3 there. The volume we'd probably like to sort of see lighter there. So you do have it's funny how you see this. I think we saw this with TUA and UX, that we saw a cup and handle within a cup and handle.
Yeah.
So there's another little, this is a little cup, little handle in here, then the big larger cup and handle. So we saw this over and over again in the last move there. But this is really interesting there, because you can see that low is 304. So this is one thing I've noticed with cup and handle. I find them hard to trade there, because I like to keep my wrist nice and tight. Right. It's yeah. So okay, there's 304. So you go, okay, I might give myself a couple sets there, maybe 302, 301. The cup and handles, they will sort of tend to break out. They'll often, I reckon, 50% of the time, give you a little bit of throwback. And then they go. So that, did break that low there by a couple cents, went to 302, hit the 20-day moving average. So it's basically come back to the 20 and then recovered there. That's that little bar there. That's what you're going to see a lot of on cup and handles, and try and shake you out. So that's why you sort of got to be careful not to be too tight on that handle. I know when I first started trading there, I was very tight. I just seemed to be getting whacked to the point where I was sort of like, I gave up in trading handles. Yeah, I just kept getting stopped out on this cup and handles being too tight. And I was like, I can't trade these things. Too hard. Then I've realized that there's still good setups there. They just have that ability to shake out a bit more. So then I sort of started to trade them a little bit lighter in size and give myself a little bit more width in the stock. And once I started doing that, it started to be a lot more effective. I started to getting a lot more winners. So that's something you see over and over again on those couple of handles. That's one thing. People are just sort of starting off in momentum trading. That's one thing you got to look at. SRL getting a bit loose, so it doesn't get my money, just because that's a pretty big correction there. But maybe it can tighten back up again. But that's the quality of momentum there. But it's some good exercises in there on that list there.
Well, as we move into the Launchpad, which is the weekly list, those who have really shown their hand within the last week on the momentum side of things, a real quick flick up. Quite often, Gary's identified within this list of 30 a whole plethora of companies within the same thematic: gold, lithium, uranium, property trusts. And I had one trader call me yesterday and said, "Look, I'm just noticing a whole lot of wealth managers showing up on my list, on his list," and that was sort of lining up the thematic. Well, what Gary and I talked about last week, and I think the week before, is definitely last week. We haven't seen a lot of new additions coming to the Launchpad on the thematic side of things. And has there been any change this week? Is anything standing out to you, or it's still the same kind of thing? We've rotated out of the heat of the momentum and it's kind of nothing's shown again just yet.
Yeah, so it's similar last week there. So obviously you got JB Hi-Fi, you've got Wesfarmers, BVS, APE Eagers Prefer, Credit Corp, Iris. So you just got some bigger names, Regis Healthcare, Elliott Group. So a lot of those names were early leaders, and then they've sort of had that tight congestion, and then they're breaking out again here for the, so it's funny that they do look like, fourth wave sort of congestions, and then you're going to go to a high fifth wave sort of. That's the thing I see. I see a lot of that sort of style here. So we don't know how far it can go, but it's we're just kind of getting a lot of what I think is kind of fifth wave type of moves there after tight congestion there. So there's just seeing those names reemerge there. I think, JB Hi-Fi.
Well, as you mentioned, they're all larger cap companies, and
well, not all of them.
Sorry, they're large. Quite often we won't see any top 50 companies in the Launchpad list. So
no, exactly. Yeah. No, but we spoke about that last week, so that's a good sign there. But number one here was 40X. So that was a episodic pivot on the and that was about Pro Medicus actually actually loaning them money, but kind of taking a indirect stake, I guess you might sort of say. So as a, for one of the market's leaders there, taking a stake in something small like this is a pretty good sign for the company there. So I'm seeing the volume bar pretty robust there. So we did get an episodic pivot there. Probably exceeded our 14% on the jump there, but it's probably not, only because it's sort of like a 24-cent stock here. But yeah, I thought it was pretty interesting. Now I did sort of see that there. Just doesn't fit my criteria as a trader there, but that's a good.
Well, on the imaging side of thing, it's been in the launchpad list for, I want to say, 6 weeks, because the only positions that I really have left in my portfolio are in that imaging space, and today they're doing well. But it's that Pro Medicus and then the other 4 companies below it. 40X is in part of that group. I don't hold that one personally, but
Yeah,
that's sort of the longevity of the theme. It's consistently just been in the top 15, 20 thematics out of 380 on the launchpad for about 6 weeks. It just keeps sort of bubbling over. But like you said, the levers can lead for longer than we expect. But also when they go for a surge, which is possibly what you're going to say about this chart here, they take a bit of a breather for maybe 1, 2, 3 months, and then they can resurge again. So is that possibly what's happening with BGD here?
yeah. So again, you've had this is an old leader, something which has sort of hit it out of the box, shown strength this year. Had a bit of a pullback there, but then it started. But look, if you draw our little channel there, you see it's sort of broken out of that channel, but it does. This is a VCP in some regard, because obviously that's the sort of pullback there. Next pullback, it tightens up. So you are sort of, each pullback sort of getting smaller and smaller, but you do need to sort of see, I wouldn't touch these until I saw a B wave break here. So I did break above that 77 there around here. So again, most people aren't going to buy that because it's gapped up. Oh no, I missed it too late. So but that's
Build an episodic pivot and a B wave happening at the same time.
yeah. So you've got a bit of a jump there, and you've I'm not sure this was news or not there for this stock here. But yeah, you definitely got to show strength there. But what the most important thing is, you've actually come through that B wave and shown strength, and also shown commitment over volume. So I mean that would be the lowest level I'd look at something like that. I want to sort of see, over the years you see these pull back, and it looks like, oh, this looks this bar here looks pretty encouraging, or then it can go here and fizz, and can go down for another 3 or 4 months, and then you go, oh, and I cheated, didn't really get a B wave break
now.
Yeah, and then it goes down. So you just got to wait till you sort of see the strength there. That's the pros aren't jumping in early; they're waiting for that
Confirmation.
Yeah, and I did try to cheat a little bit when I first sort of in the early days there, but it just doesn't sort of pay. They end up, it just ends up, you're better off just waiting for the strength to sort of show itself.
And that was an EP. I just looked it up. It's high grade silver, announced on the 5th of August. So yeah, it did fit that criteria. But it's KP2, no, something else. MA.
That's KP2, which is look, a little bit of a VCP on that, but pretty messy, pretty gappy. Not the most liquid sort of stock there, so wouldn't be sort of something that I'd look at. I noticed McMahon Holdings sort of had a little bit of a VCP in there, Chris. It's sort of shown a bit of strength, tightened up in here, just too small for me. That's, you could argue that's a little B wave break there, around breaking above 30.5 cents. So it doesn't look too bad here so far, but yeah, it's too small for me. But does fit the VCP sort of criteria and the strength there. BEE, this one has sort of shown a little bit of strength there. The volume's okay there, but it is a little gappy and a little bit overlapping as well. So it's not sort of, it's just not that clean here for me. So I don't sort of love that. WTL. The one thing we've got here, Chris, is we've got an all-time high. So we've got a 12-month high here. So most people are afraid to buy new highs. I missed it. It's too late there. But, what you do is you've got a big volume bar as well here. So, yeah, it looks too small for me personally, but that's a strong bar here. That's a nice, strong volume bar here. So, so That's the sort of thing you're looking at. I just don't trade 15 or 20 cent stocks, so that's your yeah.
That's a company that both you and I know. It's in the wealth management space. But yeah, 15 cents just doesn't get my capital. ALK next on the list.
Do you remember us talking about this last week, Chris?
Oh, you're going to have to refresh me, and also for the viewers as well who might not have caught last week. Yeah. So we've got a lot more volume since we last looked at it. Yeah,
because you asked last week about this one specifically. You said, that bar there, because this is like, 1, 2, 3, 4, 5. This is the last week. We would have been, take away the 5 bars there. We would have been basically this sort of.
I think it's only 4 bars because we're recording Thursday, but yeah, we were talking Friday.
Yes, yeah. So we've been that bar there. So look at that bar there. So talking about this being obviously showing strength. It's had the 3-way pullback. Look at that chunky volume there, really strong volume, and showing strength. Okay, and I remember you said to me, "Oh, would you classify that as your B wave now?" Because that if we're breaking through that would be sign of strength there. So I did see this yesterday, and I remembered our conversation, and I thought I'd be a hypocrite if I didn't trade this. This is like it showed strength there. It's in the right sector. The volume profile's good. It's got a little B wave in there. We've come through it. So yeah. So
I worked out okay for you.
So I put I bought some here on the break of that level. I have put my stop in back here on just under the 50, and I've put a reasonable sort of size target on it, and I'll let the market do the rest. But that's a good setup. That's what we're looking for. We're looking for those high probability sort of setups there. So,
well, if you want to, go back and check the video from last week, and you'll find Gary talking about ALK and exactly that in depth. Yeah. So that's how he finds those trades. And as we started this video, you're talking about bar by bar and candle by candle. How do you interpret it? Well, that was him doing it live at the time. But Wesfarmers, we rarely get such a large company on the launch pad.
Yeah, so classic. Yeah, classic big name, show of strength, goes sideways in a bit of a tight manner there. I mean, even that, Chris, there's a little B-wave break there. You could buy that break there with a bit of a, maybe like a 5 or 7%. It's not probably 7%. It's probably too low for Wesfarmers. You probably could get a reasonable size risk on there for say, maybe 5%, and then you're maybe only trying to trade 2.5 times that. Maybe 12. These big names aren't going to sort of do it. I mean, they don't really get my capital. They're looking for a high beta play, so I'm looking to try and trade the faster sort of moving, sort of, and maybe sort of slightly higher ADRs, but still getting pretty good signals from some of the bigger names sort of setups there. So we're going to talk about, CSL had that VCP, Premier Investments had that VCP, and Wesfarmers had a nice little congestion there. There's some good setups on some of the bigger names. So if you're scared of some of the faster moving names, you want to just practice on some of the slower ones. There's still some pretty good setups here. CAY is pretty interesting there. We do a bit of a BCP. Even though that's gone to a slight new high there, it's had good volume through here. Pull back there, a lot of volume through there. Good volume on the way up. Dried up again. So it's sort of staying some good volume there. Sort of stayed pretty light again. So this is not looking too bad. It's too small for me personally, but the setup itself is still looking pretty robust. So nothing wrong with that chart. BVS is actually one that I did see here, one of the bigger names. I wasn't sure.
I remember we were talking about this earlier in the week. Yeah. So how about it?
Yeah, because that's sort of had a show of strength, pull back. Love to see it like an ABC, but the whole thing's tightened up. And now we've just gone through here. We did break this a few days ago. Again, look at that bar. It breaks it, shows almost like a distribution bar. So like we would have, if you bought the break of the high there, few cents, and then all of a sudden it reverses and, finishes on its knees, on a high, it's like a lot of momentum traders would have seen that and going, oh, shit, it's no good. I've got to get out. So they freak out. They close their position, and the next day it does a small down test and then recovers, and they go, oh, maybe I should get back in again. And the next day it breaks up, so you're overreacting to every bar. It's not the way to go. You sort of, you got to have a process. Okay, if it trades above this level, I buy it. I put my stop in it, and whatever my risk is, say we just below the 20. Try and keep my risk. I mean, like a lot of momentum traders will keep their risk around sort of 4 to 5% risk as well. So they won't. O'Neill was sort of like, O'Neill was sort of trying to capture the strongest stock on the board. He was often buying 52-week highs, and he would often be building up large positions in single stocks. So he gave himself a bit more width because he figured he was, pretty much catching, trading the biggest fish in the market. So, something like an Aussie market might be Pro Medicus or that Wells Catapult, those sort of 360. So those type of big, fast, strongest growth names there, the sort of stocks so he would have been trading NVIDIA. So he give himself a room and starts there to sort of trade those. But the key thing there is just have a process. So you can see here that everyone's going to be slightly different, and sometimes they're gonna, they're gonna burst out of the blocks and not come back. And other times they'll do a little bit of a shake, and then I'll try and shake you out on the downside. So if you do, I've sort of found here, I like the reason I'm starting my process is that to me it smooths out my return, because sometimes you get a bit of a jump and then it doesn't follow through. So a lot of breakouts will have that early move, and then when they don't work, then they fizz out and they start to break down. So by having that sort of, getting some out at say 2.5 or 2.75 times, or whatever it is, you lock in a little bit of a gain, then you get your stock to break even, and the whole thing fails, you go home with a little bit of a small winner. So you keep your account ticking over, even if they sort of fail. Because sometimes those breakouts, they can just have that breakout and then fail. But then if it keeps going, I'm taking some off, but then I'll let the rest ride, and I'm taking more off on more multiples, and letting some hopefully ride if it's a big move in it as well. So you just don't know. So the whole idea is to have a mechanism to sort of try and capture that sort of big move there. But the BBS has sort of come through. Looks like a pretty good setup there. AP Eagers there, nice little cup and handle there just as well, even though it's gone slightly higher there. Yeah, it's pulled back there, not too much in there, and a pretty robust price action there as well. So coming through the top here, we're getting strong price action. So
are you concerned looking at that chart there? We've had the episodic pivot, clearly news runs up, good volume, March, April, May. Yes, it's market leading when the market's coming down to lows.
Yeah.
But the volume seems to be diminishing throughout to June, and then sort of still falling throughout July and August as that share price is sort of casting new highs. Are you concerned with that sort of volume profile, or how do you interpret it?
Yeah, no, definitely. Yeah, definitely a concern. When we're sort of hit that, sort of in terms of my cycles as well, sort of early April through to early August. I mean, today would be a perfect day for a top the market, to be honest, because we're literally 120 days from the 7th of April low. We're pretty close to that 25% expansion for a lot of those markets. Not all. I think the S&P's fallen short. But again, we don't know. We can keep running here. I mean, I noticed Mike Webster had talking about the power trend. So in terms of the power trend, the average number of days, I might be about 79 days for the power trend before it broke the 21. So I think we got to about 109 or something, which is not the longest, but was definitely getting beyond the normal power trend before you get a bit of a pause, So we've definitely extended here. So I am nervous, because I'm still sort of seeing sort of good setups here, and I'm like, so I'm sort of trying to stay with what I've got because it's still running. But I know that the volume's starting to come out of the market, and I feel like we're getting to the end here. So I have enacted some of my trading rules there. I'm not a blanket trade throughout the whole season, but once I sort of hit what I call off-peak seasons, which we are now sort of pretty much we're pretty much hitting off-peak season right now, in my opinion. So
which is you turning into a risk-off, reducing risk.
Yeah. So it just means that I now can't take the same sort of size positions, and I can't take as many positions, and I've got to hold a bit more cash than I normally would hold. If we're but that's me. I know Mike Webster, IBD. He looks at the 21 day on the Nasdaq is his. If the Nasdaq is above the 21 day, foot down. If it crosses below the 21 day moving average, foot off the gas. So he's taking stuff off there. So I noticed actually before we had that pullback of the day, because the power trend had been extended and was sort of up in the top 10, 20% power trends, he'd already been lightening off. So there's pro already starting to de-risk his portfolio because as the market's extended, it's getting long in the tooth. Still holding long, it's not even wrong. It's still got good positions on, but taking some risk off. So, that's got to be sort of, got to have that back in mind here. I mean, I've sort of just been trying to let stuff run here. But I've curved myself back to my maximum position size and other positions definitely shortened up here. So,
well, like what you say about the power trend, it's an indication of when to be invested, when to be leaning in, when to be taking opportunities, looking at breakouts and not necessarily chasing them, but being really keen to get on them, as opposed to times when sort of be lighter. And I just recorded a video yesterday. Members have got it. Will come out to the public on Sunday about, well, can we use the index as a barometer of when to lean into and when not to for momentum trading? That trend is what a lot of professional traders use, but it echoes on the momentum profile.
Yeah. But I used to, whenever I thought the market at their peak was looking pretty long, I would just sort of almost shut everything down. And then I realized I was long all these good setups and I just kept going. The market might go through a congestion, it might go through a topping pattern and might weaken off, but some of those names can sort of keep going here. You definitely get distribution going through some stocks and some sectors are still pretty strong. So it's, so I don't do that anymore. I don't, because in the past I felt like I've exited stuff too early when it looked pretty strong. So, but I've just sort of created myself rules to sort of lighten off there. So, I'm about a third in cash at the moment. So I'm not allowed to go more than 2/3 at the moment just because of that. That's my rules. So,
and that's from experience trading the markets, looking at your opportunities, fitting in with your long-term blueprint cycles, that kind of thing.
Yeah, well, I know sort of roughly about 140% of my profit for the year comes from that sort of 12, 13 weeks of the year. So that tells you a lot about, when the market's on, that's really time to foot down. But then we just off. Because when it's off, that's sort of the whole idea is that you got to lose the least amount of money when it's not going. So and I know sometimes you can hang on too late, and you go, the market is looking sort of like so you just got to take some odds. So it's like measured. So it's like building a position, scaling up, and then trying to solve some of the it's just risk management. So that's like the one thing every market wizard book, the one principle which is universal is risk management. So I think a process to manage your risk there. So that's what I'm hoping is going to make the difference for me personally, is that is the ability to put the foot down when the going is good, and then to take it off when it's not so good. If I can differentiate that a bit more, then that'll get me more aggressive when I should be more aggressive, and it should be more passive when I need to be, but rather than just trading constantly the same way through all market conditions, which is not the way. So I mean, that 21-day moving average, I think that's if I didn't have my cycles to look at, I'd be using something like that. The markets, how the market's sort of holding up strength-wise.
Well, if anyone wants more details on when to lean into those trades, you can check that out. But the members have access to the momentum profile we've created exactly for that. Sunday's video that will come out showing the momentum profile versus when the index is actually at its best, and that's not coinciding with when the best momentum opportunities have been on the ASX. It's actually really surprising. So that's a good in-depth analysis, bar by bar. Thank you very much, Gary Glover from Novus Capital, and we'll be back next week.